Hey guys, welcome back. We've got our next guest today, and it's one of our most famous members of ADMC. You probably know him as Rick Willeford, and he is the founding president of the ADCPA. You might not know that, but he's the man behind the Academy of Dental CPAs. And Rick, I have to tell you, he is not your typical CPA. You won't even believe this. He has an electrical engineering degree from Georgia Tech, and I find him not to be one of those people that's real rigid. He's very friendly. He's somebody I call my friend. When his partner and daughter, Kate Willeford, took over the CPA practice several years ago, he couldn't stop. He didn't believe in retirement, so he spent a lot of time and money creating DentaMetrix, a next generation boutique professional strength analytics dashboard program, and it's for consultants. So the combination of his knowledge, the cutting edge technologies, his deep business experience, and his understanding of practice management, that side of dentistry, give him a unique perspective to enhance revenues and plug the profit leaks in a dental practice. Now, one of the things that I think sets DentaMetrix and Rick apart is that he's very pro dental consultants. He believes that we're the experts, that we should be the one guiding the doctors through their financial dashboards, right? Right, Rick?
That's right.
Yeah, so he's pro consultants, and he wants to help us be the expert directing our doctors where to go to heat up the needle on the thermometer. So Rick, before we get into some specific numbers, I understand that you have some overarching principles relating to KPIs and success. So welcome, take it away. Tell us more about this.
All right. Thank you, Debbie. Glad to be here today. Hope everybody gets something useful out of this.
I think they will.
I guess one of our first principles involves the fact that, if I could see a show of hands, how many of your clients actually use their software, DentaMetrix, EagleSoft, et cetera, to the fullest extent? And I don't believe I would see enough hands raised to have to count them. So we as developers have a problem in that if your clients don't use, let's say, case acceptance properly, we don't want to just throw up our hands and say, well, let us know when they do it right, and we're happy to count that for you. So instead, throughout our program, we've had to use artificial intelligence and fuzzy logic to figure out how can we capture this data, even if we have to estimate some of it, in spite of the client not putting information in the system well. So that's one of the items. The other item might be which numbers to watch. And we know that everybody thinks in terms of production and collections and that type of thing. But keep in mind that you can't have a morning huddle and say, guys, last week, our production per day was lower than we wanted. Let's get the production per day up, and you guys have a nice day. Bring it in, huddle, 1, 2, 3, height. Let's go to work. Well, production per day is what I would call an indirect KPI. There's no dial in your office you can turn to magically increase production per day or collections per day or things like that. So what we need to focus on is the underlying items that really move that needle. And that's some of the things I'll want to show you in a little bit. We also want to be heavily goal-oriented, we think, whether the client is or not. As the old football coach Vince Lombardi used to say, if you're not keeping score, you're just practicing. But we have to have some goals, or things will keep on keeping on as they have been. And the consultant and the doctor can negotiate and agree on some goals. And probably the consultant's going to be on the higher end of the goals than the doctor may want to be. But that's why you are the fiscal fitness trainer, is to say, come on, doc, let's do one more rep. We can do this. A warning we have is the danger of the word averages. I was at a meeting hosted by Dental Economics a year or so ago, and one of the national well-known consultants was opining that he's now seeing dental supplies are running 9.3% instead of the old 6% we've thought of. I said, wait a minute, gag me. How is that possible? And what's happening is that they're not defining their overhead, and what they're doing is they're measuring their overhead as a percent of collections. That's not all bad, and that's the easiest way to do it, because probably their QuickBooks and their CPA is producing financial statements that really start off with collections. That's okay for your practice. But what if your PPO insurance mix is different than the guy down the street? What if somebody else's fee for service? Your collections of, let's say, $1 million in a big PPO practice may have required you to produce UCR standard fees of $1.5 million before your write-offs. Well, keep in mind, production creates overhead. Yes, collection pays the overhead. But if you had a fee-for-service practice collecting $1 million, theoretically, they're producing just about $1 million. The PPO practice is producing on paper $1.5 million to collect $1 million. Well, don't you think somebody producing $1.5 million, my PPO person, they need more chairs, more staff, more supplies, et cetera, et cetera. And so we'll show you in a little bit how we suggest you look at overhead based on production at UCR fees. And you can also use collections because it's handy, but you can't use your collection percentages as you compare across practices because every practice is different. The common denominator, though, is standard UCR production. We'll worry about why you're not collecting all that later based upon other factors, big one, of course, being the presence of PPOs.
So, Rick, I want to just mention one thing. If you could look down at your screen,
Yep.
If you'll click on video, I think your video might not be on.
What? It says
Yeah.
it is.
And when you click on video and the arrow up, FaceTime, there, okay. I think you got a fancy computer, but I don't see you, but we'll see. I mean, I don't see, hopefully we'll see. Yeah.
Because I've got the little button that says stop video.
Okay. All right. So I'm used to seeing you at different views.
I see my image, my little teeny image in the top of your screen.
Good. All right, great. So I wanted to just stop you there.
Okay.
You said some really important things. One of the things that, I was not as numbers focused as I was 5 years ago. I was not as numbers focused as I am now. And I want to say that.
You say that right now.
You've helped me to really embrace this. So thank you so much for your wealth of knowledge. And you've kind of come alongside me and coached me on what to look for. So I really appreciate that. And I just want to let the ADMC members know that Rick is a wealth of knowledge. He has taught me so much about what he's saying today. One of the things that I really like, and I want you to, I think this is important. I think it's important. You were talking about the supplies.
Right.
That it used to be 6% and now it's 9%, right?
Right.
And I thought that was pretty interesting what you said, because one of the things that I'm hearing a lot of is that doctors are now buying on Amazon a lot of their supplies. So I would think it would go down. And then your head, can you move your computer so your head is more equal? I don't know if you see, there we go. Thank you. Yeah, now that's better. Okay.
Well, I wanted to show off my latest hairstyle.
I see. You do a lot better than that. So
it's a matter of definitions and terms. That's why I'm saying you must listen critically. For instance, this same speaker and others have said that the average production per hour for a doctor is $315, say.
Okay.
And you're thinking of some of your clients saying, that something doesn't smell right there. Well, first of all, how do they define production? There's 4 different productions. You've got your UCR standard production. You've got your net production after you have some other write-offs, preacher discounts and all that. You have your collectible net production that you can fuss at the front desk. You truly expect them to collect that. And then you have a mixed bag that we call either posted production or stated production. How do you post production in your computer? Some of you are still doing it like we did in the old days. Even if you have PPOs, you'll post all the fees at the UCR standard rate because that's how you used to have to do it until about 3 or 4 years ago. Well, now Dentrix, EagleSoft, Open Dental, all those, they're saying such a deal. Now, if you want to, you can post your net PPO fee to your patients. We're smart enough, Dentrix, et cetera, we will go ahead and bill to Delta your actual UCR fees regardless of how you post them. So a lot of folks have started doing that, maybe 80, 85%. In fact, it saves you a lot of bookkeeping. You don't have all these adjustments every time the EOB is showing up at the front door. So that's not a problem. Most consultants, though, are uncomfortable because now the doctors, the practice no longer have these massive manual adjustments they used to do. And over time, they're now forgetting these. And we're going to look at that in a minute as to how we analyze that in something called a PPO Wizard. And so when somebody says dental supplies were whatever, the fact is they are still close to about 6% based on production at UCR rates. They're messing this up by commingling and confusing that with collections or net PPO production. And so they can't compare to the dental economics, national averages, and things like that. Likewise, when they say the average doctor produces $315 an hour, most of you should be throwing up saying, you got to be kidding me. I've got doctors doing $500, $800 an hour. What is going on here? Again, it's a matter of terminology. First of all, what production do they mean? Starting to sound like net PPO production to me, not UCR fee-for-service production. And I think they're lumping together all the providers, whether it's Medicaid, DMOs, PPOs, fee-for-service. That's a mishmash that's not useful to anybody. So when you're in the audience listening to such things or reading such documents, question, how, Mr. Speaker, are you defining the term production? Is this just fee-for-service? Oh, no, it puts in PPO. Well, we've got PPOs all over the map. One practice has 90% PPOs. Another has 0% PPOs. You can't compare apples and oranges. So that's what I was talking about there.
So, Rick, you mentioned $315 an hour average production. Where did you pull that number from?
Well, that's what I've seen some speakers use.
Oh, my gosh. I want my doctors, I want to be closer to $800 an hour.
Exactly. But keep in mind, to be fair, the kind of doctors that hire you and our ADMC consultants are probably not mired down in the bottom level, at the bottom of the pool, first of all. And again, how are they defining production? You want them to produce whatever, $800 per hour at a standard fee. Now we have another problem if they can only collect whatever, $600 per hour because of the insurance PPO presence. And we'll dig into that, but don't commingle all that stuff because you create a useless number that has too many variables in it.
Okay.
That makes sense?
It does, yeah. And I want to just also say that, during that time when you were mentoring me, and one of the things that we learned was, and this was from your PPO Wizard. So one of our clients, I don't know if you remember that doctor in Indiana, but he was writing off so much, and you were helping me learn how much he was writing off. And then we discovered, do you remember this, where we discovered that the fees were not correctly attached to their open dental. They were billing out the wrong fees. That fee schedule was incorrect. So I just wanted to say that having that PPO Wizard, which all these, we've got so many other people doing, everybody wants to do what you're doing with the DentaMetrix.
Right.
But I really liked that you had the PPO Wizard. That was very helpful to us.
And I'm going to show you that in a little bit.
So,
because I think that is important, because a lot of folks think they're fee for service, and perhaps they are, and they're not, quote, in any PPOs. But then we show them plan by plan by plan, why are you not posting then your UCR fee? What's going on here? Mm-hmm. And that's an area, a profit leak for the consultants to dig into. And I facetiously sometimes refer to DentaMetrix as brains in a box because it's a tremendous training tool, especially for the newbies and new consultants. Or let's say they come from the clinical side of the house, but they realize they need some help learning more about the front end of the practice. And so the same goes for folks from the front end who were not into patient retention and things like that, and the PPO Wizard and the recare issues and the soft tissue. So this collects so much data so simply and lays it out nicely. It's a great learning tool for folks who are curious.
Yeah, Rick, I mean, you are just such a wealth of knowledge. Thank you so much. I'm so happy that I get to interview you. You know, how exciting for me, because I just learned so much from you. And I keep saying that because I want the ADMC members to reach out to you because you're just such a wealth of knowledge.
Right.
I wanted to say that I understand that you have boiled down the elements of practice success into 3 high-level categories. So, you know, can you talk about that with us?
Yep. A good way to organize these KPIs, key performance indicators or monitors, I'll say KPIs, we divide those into 3 broad categories for success. And that would be the patient category, that would be the production category, and that would be the profit category. You need all 3 of those to be successful. And I thought we'd drill down in some more detail to some of those. Yeah. So let me see if I can do this fancy screen share.
Share us some of your pictures.
And let's see.
There we go. I can see it. Can you expand it a little bit?
How about that?
That's nice. And is this a dashboard that the consultants can kind of, you know, customize for themselves what they want to see as the top metrics?
Oh, yes. Okay. So what this is an overview of about 40 main profit leaks and areas for revenue enhancement. And so what we're showing you on the left-hand side for various items, and we're going to go drill down into some of these. Here's the actual amount. For instance, total production per day is open, 8,182. And the consultant has decided, and the doctor has agreed, that really our goal should be 8,727. And so that means our daily actual versus goal is short $546 per day. And that equates to, for the year, net, after their average write-offs, depending upon their practice, PPO makeup, et cetera, that's $92,931. That's a nice chunk of change. But again, there's no way to simply say, hey guys, we need to get more production per day. Have a nice day. This is one of those indirect items that we can measure. We're going to look in a while and see, well, Rick, how do we get this figure up? And that's where the consultant comes in as the most important part of the equation. For those who don't know me, I was a dental CPA for about 40 years, and we would have many of our dental clients go off and buy some gadget or software or whatever. And after 2 or 3 months, they were saying, well, it's sort of like drinking from a fire hydrant, some of the softwares out there, and they don't know what to do with the answers. They're not stupid, but they signed up to be healthcare providers, not bean counters. And so that's why we need the consultant to explain, why do these numbers look the way they do? Do they look okay? Would you like to improve them? How do we improve them? Or where are you doing okay? Mm-hmm. And so this whole page lets you, in fact, on the fly, put in a test goal. For instance, $400 over here. That momentarily is over here, this 400. Mm-hmm. They're producing right now $378 per hour worked. This is not for 8 hours a day. This is per hour worked. An hour worked, you'd learn later, we define that as fannies in the chair. What if you have an associate who produced $1,000 on a patient in 1 hour, but that's the only patient he saw all day? So most folks would say, take that $1,000 and divide it by 8 hours and say, oh my God, this guy's worthless. He's only doing $125 an hour. And we say, no, you're combining two different things. You're combining his actual production, and then you have open time. And we'll look at that separately. It's not his fault he did not have his chair full. If you can fill his chair every hour he has a patient, he might be able to produce $1,000 an hour. And so that's what I'm looking at here is per hour worked. If your schedule's full, that's going to be the same either way. But in a lot of cases, your schedule's not full or you're startup or something like that.
Okay.
And so we wanted to go to $400 per hour worked. That doesn't seem unreasonable. That's a simple increase of $22 an hour, but that's $83,000 net for the year if we do that for all the different providers in this particular practice. Make sense?
Makes sense. Yeah, good info.
So this is your production category we talked about. Let's look at another couple of interesting things. How about percent open time, doctor and hygienist? We don't see that tracked very well. And we dig into the actual schedule and we can see, quote, fannies in the chair, where patients were appointed and showed up. We'll talk about that too. But then we can compare that to what's an allowable goal for open time. 8%, say, for a hygienist might be one no-show a day or one slot per day. And you can change this, but we're discovering that we had 19% open time for the doctor, 23% open time for the hygienist. We compare this to their available time that they give us, 8 hours per day, say, times 20 days a month would be 160 theoretically available hours. We compare that to what the schedule actually did. We don't have to ask the staff to go dig this out. We can do that for them. And we found that hygienists had 23% open time.
Not
and
good.
So that's an area to dig into. Now we have broken appointments. We feel strongly you should segregate, quote, broken appointments into true broken, failed, no-show, no-call, I call technically scum of the earth. That's a broken appointment compared to a short notice cancellation. They loved you enough at least to call. They had an important golf game that came up or a pressing hair appointment or something. But I want to be tracking and separating true broken no-show failed versus short cancellations. Because if you have limited phone call time, I think you want to probably focus on the cancellations to get them back in. And we do battle with a lot of practices where they want to take the lazy approach, their practice, up to them. But if somebody calls in, cancels an appointment, and then immediately reappoints 2 weeks later, a lot of offices will just slide them over and all is forgiven, and they move on. And we're saying, whoa, whoa, whoa. If you want your software, as well as our software, to pick up the fact that she was an offender, you need to break the appointment first and then attach a code or whatever to indicate whether it's truly broken or whether it was canceled. Mm-hmm. Because we're going to look back over the year and Susie Smiles, who's anxious to reschedule, and of course they may cancel that one too, but she's done that 5 times to you last year. Mm-hmm. I want you to capture that fact. So you're not going to give her a 5 o'clock appointment after the 4th cancellation. But a lot of folks are not tracking that because they're a little lazy. But now the big point is we can't necessarily control the brokens and canceled. Of course, with communication skills, et cetera, we try to. But the big thing I want to track is, so they broke or canceled. How successful were you at getting them rescheduled? And that's what we're showing down here. This is broken for doctor. Broken and canceled was 37% not reappointed.
Mm-hmm.
I said, wait a minute, I'd like that to be 5%. Again, it could depend on, is this a heavy PPO practice? It's not their money. If a good golf game shows up, they just soon not come in. The consultant would know that. And the consultant would adjust these goals to realistic accordingly. Is it a Medicaid practice? They aren't sometimes the best folks to keep time or whatever. The consultant would understand that. So when a doctor ever says, why are our numbers so different than the goals? A smart consultant or CPA or lawyer, their first answer always is, it depends.
Mm-hmm.
It depends on what? We'll talk about that some more in a little bit. So I think this is leaving a lot of money on the table where the front desk has not successfully rescheduled these broken and canceled.
Right, right.
Of course, we all know about case acceptance, and we are trying to track this by dollar amount and by numbers. There's oftentimes a big difference. We had a client who went off to one of these Invisalign courses, got gung-ho, and immediately came home and treatment planned Invisalign for every patient for the next 6 months.
Mm-hmm.
Well, at $5,000 or $6,000 a pop, if 90% of them said you're crazy, that really puts a dent in your case acceptance if you just look at dollars. But that's why you might want to look at patient numbers too, so the dollar amount won't throw it off. But here's some more interesting things you can't dig out of your system very easily. We're asking what percent of your existing patients have had 2 treatment plans or more in the last 18 months. So this doctor had 75% of his existing patients did have 2 cases, 2 treatments, either restorative or operative or recare, anything. Is the patient still alive? And 75%, believe it or not, is oftentimes a high number. We do see practices down at 40 and 50%. What's going on here? It talks to not only how many theoretical active patients you have, but what's the vitality of your, quote, active patient base. And so you may need to follow up with them. A reason for this, if it was down at 40%, we would say, doctor, look out your window. The consultant, as they're going over this, doctor, look out your window and tell me what you see. Oh, you see the USS Constellation battleship and this, that, and the other. Oh, you must be near Norfolk Naval Base. Yep, sure are. Well, half of your practice leaves every 12 or 18 months. It's not your fault they went to sea or whatever, or got shipped out and transferred and that type of thing. So we would expect lower retention rates, things like that, through no fault of the doctors, but you would know that. On the other hand, if they look out the window and all they see is cornfields, oh, you must be in Iowa or someplace out in the Midwest where there is that much population turnover. There, you would expect to see some pretty good retention, and we'll look at that. Down here, we use an old Charles Blair technique talking about intensity, where he's comparing 2 procedures, and we're saying for every 100 3 and 4 surface fillings, for every 100 of those that you do, how many units of crown and bridge do you do? And this practice is only doing 10 crowns for every major filling. We'd like to see certainly 30, 40, 50% maybe. Again, it depends. We have clients who are 200%. We have clients who are 600%, obviously cosmetic heavy. They don't do any fillings, if you will. But it's fun to track this, and nobody's known that. If he could just get that up 17 patients a month on average, that'd be $152,000.
That's huge.
And so here you're adding up all these numbers, and this is the basis for the free practice analysis we'll do for all the members, complimentary, where we hook up and extract some data and give you a report, something like this, that at the end will total up, well, doctor, all this adds up, these red numbers, to about $1.3 million. And hopefully the doctor's next words are, can you help me with that? Well, as a matter of fact, we can. And so contact me, Rick at DentaMetrix.com, if you'd like to do a complimentary practice analysis for any of your prospects. And then you can show them more what the tools can do and hopefully get them to sign up for the full program possibly.
Nice.
Over here in the patient area, we look at the number of new patients, where are they coming from, internal, external, yada, yada. But notice this, I asked what percent of the new patients get enrolled in your hygiene program? And we consciously look and constantly look at a 4-month rolling window for case acceptance for some of these other items we'll see in a moment. In other words, let's say we're in May, and on May the 23rd, the doctor treatment plans a $15,000 case. I think in a lot of cases, the patients want to go home and say, hey, can I check with my spouse? Can I check my bank balance? Can I get financing set up or whatever? And the odds are very rarely would they say yes to a $15,000 case. And so that's why we think it's probably not very helpful to look just at day by day, or certainly even week or monthly. We want to look at your cumulative rolling 4 months. So we automatically look and see 4 months ago what was presented. Then we track that. Let's say it's the month of April. We would go back to January and see what was presented. And then we would give them January, February, March, and April to make an appointment, which we would consider accepted. We think that ratio over time smooths out the peaks and valleys. And so we're doing the same thing here with the new patient. The new patient may have come in as an emergency or whatever and didn't necessarily come in through the hygiene department. So we want to give them 4 months to come in, get their initial need fixed, get them to come back in, do an 0150 possibly, get them into recare. So we give them 4 months to get into the recare program. Once we get them in the recare program, we want to check several time periods. I only put one here. We look at 9 months, but here's 18 months, and say, of those folks who came in 18 months ago, what percent of them have had at least 3 recare visits in 18 months? Now, if they were right on the spot, they could really work in 4, but 3 is enough. And that's a way for us to tell who's really in the practice on a regular basis. We also look at this percent of new patients that had something major diagnosed. If the study club, the young bucks in the back, they're anxious to be able to brag, I had 100 new patients last month. The great cheer goes up. And of course, one of the old codgers further in the back says, yeah, but how many of them needed any work? It could have been a whole bunch of soccer moms. They got good dentition. They didn't really need anything. They're just changing dentists. And so we want to look and see what percent of the new patients in that 4-month window ended up with some procedure diagnosed, restorative, operative, or SRP, not recare. If you can't sell recare to the patients, we got other problems, right?
Mm-hmm.
So that's what we're telling you about here. But then in the next area, we get to clinical, and we say, what's the production value per new patient? And of course, every consultant has their own theory. They want a lifetime value. They want an annual value or whatever. And so I said, I want to know, using this 4-month rolling window again, for the very first real encounter with the patient. Over the first 4 months, what's the production per new patient? And notice this person has an average of $1,097 per new patient in that first 4 months. It's too vague to talk about lifetime and things like that. We had a goal of 1,000, so there's no red number here. They're doing great. If we see $600, and it depends why that might be, Medicare practice, whatever, then you'd have a conversation. But what if we see $2,000 there? That's fantastic. Or is it? Might they be over treatment? We'll look at that in a minute. We look at the percent of new patients who got fluorides and sealants and FMXs. But then down here's a biggie. We look to see what percent of the emergency patients that came in over a 4-month period come back for an 0150. Look at that, only 5%. Doctors, at your standard of care, oh, we do an 0150 on everybody. Maybe not. We'd like it to be some percentage. I put in 65% as a typical benchmark maybe. Then I ask how many crowns or 3 or 4 surface amalgams, that's a significant procedure. How many of those do you do per new patient? And this is a fraction, 0.25. That means 1 out of 4 new patients does, in fact, have something going on. If you have a young associate, we may see these numbers are much smaller. The new patient value, how much was diagnosed, things like that, crown and bridge, all those things. So the consultant and or the senior doctor may have a little prayer meeting and discuss why, Mr. New Doctor, aren't you treatment planning better? These other things. Coming down here, ReCare and Perio is a special category of production for GPs and periodontists and perhaps pediatric dentists. Got the good old hygiene percent of total production, 30%, say, the consultant put in here. But now we ask, wait a minute, what's the ReCare rate? That is, we know how many patients had a due date for hygiene in the month of May. We know, let's say, 100 patients should have come in the month of May. We look to see how many of those actually had an appointment in May, and we'll even look into June. We'll give them a 60-day window. What percent of those had an appointment compared to the due date? And this ReCare rate's 59.8%. You might have gotten a lot of folks in the door, but they're not coming back in. What's going on here? Let's nip that in the bud and get some patient lists to find out about the 40% who didn't come back in. $100,000 sitting there if we could get up to our 70% goal. And of course, you've got the percent pre-appointed. We have the percent of no ReCare at all, ever. And of course, that's a big deal because the consultants are always saying that probably 60-70% of all your new restorative operative comes through the hygiene department. So it's not benign not to have them in here. The same was true with the pre-appointed. The pre-appointed, let's say, is 79%. And you're ready to jump up and down and say, hey, what's going on here? And the staff says, it depends. Maybe the staff needs communication training to get those folks back in. Maybe your protocol should be, let's say it's an airline pilot that comes in and they're finishing up their ReCare for the day. And they say, rightfully so, I don't know my schedule in 6 months. You should not just give them a pass. It's sort of like the IRS. The IRS, when you do your tax return every year, they really don't care if you file on April 15th. They're going to get interest and penalties and all kinds of stuff from you. But they do care and get really ugly if you don't file an extension on April 15th. Why is that? They want you locked in the system. And so the airline pilot, we'd say, well, Fred, I know you don't know your schedule. It looks like you like Thursday afternoons. Why don't we go ahead and put a space in here for you, like a bookmark? Let's go ahead and set up an appointment 6 months from now on Thursday. But we'll make a note to call you in 5 months and let's renegotiate an acceptable date when you know your schedule. How's that sound? So that's going to bump up your pre-appointed rate. It could be the staff has been to the Hinman, they've been to all the training, getting the patient to say yes, and they know how to get them to pre-appoint. The problem isn't the staff. The problem is you don't have facility. You don't have enough space to fit them in. Here's where you have the prayer meeting with the doctor and say, Doc, I noticed you've got that old room down the hall that's full of boxes and Christmas trees and ornaments that you said was equipped and ready to go or pre-plumbed. Why don't you put a chair in there? Of course, the doctor's first words are, well, I can't afford to put a dental chair in there. I say, doctor, let me crawl across the desk here and grab you by the throat and explain, based on these numbers and the patients you can't see, you'll pay for that chair in cash in 6 months. And he just didn't know. So that's the data you have there.
So,
yeah.
I thank you very much. That was a very thorough overview. I wanted to ask you, you are telling us that, and we've heard you at our meetings, you're saying that DentaMetrix is the best analytics program that a doctor can't buy. And I started out by talking about how you're such an advocate for us consultants. So explain, why is this the best?
Well, first of all, it's based on my 40 years of CPA with thousands of dentists.
I agree.
As you mentioned in the intro. But our philosophy is, and I don't know if you guys recall 15 years ago when E4D first came out to compete with CIREC. People would buy the CIREC machine. They were too lazy or cheap to get good training. All of a sudden, the CIREC wasn't worth it, and now it's gathering dust in the corner. The E4D folks said, doctor, we will not take your $135,000 check until you and a staff person come to Dallas for training. We will not take a chance. If the doctor says, you're crazy, thank you very much, doctor. We're not suited for each other. And that's where the lights went on to me, that for the doctor to get best value for this is to have the consultant able to wiggle these dials and explain what's going on. Because remember, 85% of your doctors, they just want to know what time it is, not how the watch was made. It's your job to know how the watch was made and then give the doctor the bigger numbers on this page, go through stages of what you think is important and things like that. Let me take a second here real quick and show you this PPO you were talking about.
Oh, okay, thanks.
Here's where we show the true gross versus net PPO production. The green is fee for service. This particular office only had 2 PPOs, Delta and Cigna. And here's what Delta plus Cigna plus fee for service amounted to, maybe $175,000 posted production, if that's the way the doctor posts it. But we would say, wait a minute, doctor, that's what you got your net PPO amount from the insurance company. But this white area is the amount you left on the table. We reverse engineer, just like DentaMetrix and EagleSoft and the others do. We know what your UCR fee schedule is. We know what you posted to the patient, and we can find this difference. That's the money you're leaving on the table. But even more interesting, let me come down here. We then look at each carrier individually. Here's the Delta, here's the Cigna. And so here's the net PPO fees, and the office thinks they did $450,000 with Delta. And we said, I beg to differ. You actually did closer to $775,000. Could you have billed UCR fees? This is the number, by the way, we talked about using to calculate your overhead if you're going to compare to other practices, surveys from dental economics and things like that. And so here's your write-offs. And down below here, we tell you that's 42.5% is your actual write-off. You had 874 patients in your practice involved with Delta one way or another, and that's 35% of your patients. Most of the offices we see will have, 4, 5, 8, maybe 10 PPOs out here, and we can show you the relative profitability, using the term profit loosely, with each of the plans, and we can get you down to the individual plan level. If you've ever looked at an insurance report out of most of the practice management systems, it's difficult to use because there isn't one Delta. There may be 147 Deltas. But we pulled all those together for you here at the big picture level. Later on, if you want to drill down further, you'll see all the other instances of Delta. Let's see. I wanted to show you The financial flash report. This is where I was talking about looking at production versus collections to measure your overhead. What we suggest is, and some of you have been to our webinar, we've done webinars for ADMC that are in the file, the dental cash flow for dummies. And our subtitle is P.S. You don't need no stinking P&L, profit and loss. Most of the time, the office manager and or the doctor, their eyes roll in their head when the CPA gives you this monthly P&L, because it just doesn't jive with reality. Show me the money. Where'd the money go in my bank account? And so what we're after is net operating cash flow. And this is before the doctor and his profit and his salary. He may not take a salary. He may just take profit draws, whatever. And so this is just the major overhead expenses. And so over here to the right, we're showing here's your overhead based on a percent of collections, because that's the way you choose to do it, doctor, and that's fine. I'm going to show you both ways. And you decided your overhead should be 85%, say. Now don't throw up. In overhead, we're not following the accounting rules. In overhead, we're looking at staff and supplies and lab and facility and general administrative, but we also throw in your debt service. And that's what really throws you off. The CPA is showing you all this depreciation and amortization, which is clever and smart and fantastic, but that's for the CPA to do tax projections, not to manage your practice, because the CPA does not include your loan payment, because that's not the tax deduction. And his focus is typically on getting your taxable income. And so, doctor, you're really at 81% compared to this goal you came up with, you and the consultant. And we'd say, doc, you're below your expense overhead. You're having a fantastic day. Everything is great. So let's move on to something else. Your practice is hitting on all cylinders. And in fact, we show you month by month by month over here. Here's what your overhead looks like. And the doctor said, but I don't have any money. Oh, well, that's a different issue. Doctor, this green here, that's what was left over after the major bills, personnel, supplies, etc. The practice generated green cash flow for you. Now it's between you and your spouse and your CPA and your financial planner. Where did all this cash go? Keep in mind, doctor, that this cash is not just what you showed on your tax return. Mm-hmm. When your CPA wisely suggested you put your 3 children on the payroll, that's fantastic, great tax deduction, but don't insult us and call that overhead. And don't bug the office manager that your personnel costs are out of line. No, that's where you're, quote, stealing from the practice for yourself. And that's part of the green here. I remember you telling me that BMW parked out front. You convinced the CPA that's obviously for business, and so he runs that through the practice. More power to him. But that's not really overhead. I understand, doctor, you went to Maui to take your annual CPR certification because the course at the Nasty Holiday Inn down the street just wasn't good enough. We say, that's fine. We'll certainly write that off, wink, wink, nod, nod, as continuing education on your tax return, but don't insult us and call that required continuing education. And so your retirement plan, everything besides the major operating items, all your discretionary money is in the green. And so that's where a lot of consultants are now digging more into, where is this going? So over here, I make a note that you can specify how you want us to show the numbers up there, but we're showing you your percent of overhead both as a percent of collections and as a percent of UCR standard fees. That way we can compare to those articles you see in dental economics or wherever. And so these categories would be different. Your supplies plus lab is maybe really 17% of gross production, supplies and lab together. Whereas on your P&L, it's using collections as the overhead, it's 21%. internally, that's fine. But don't get a hernia trying to get your supplies to be 6% because you read that somewhere years ago. Remember, years ago, there were no PPOs. Everybody was essentially fee for service. Production and collections were essentially the same. Down here, since we're doing cash flow, we can show you the EBITDA. And this is something new the consultants are getting more into, is the DSOs discuss practice valuations and things like that. No accountant generally would be giving you routinely the EBITDA. And it's a multiple of this number that sets your practice value. Down here, we're showing you your collections versus your business plus personal, like we suggest, break even. How much do you need to pay your major bills at the office? How much do you need to take home to pay your mortgage and things like that? That's your break even. And so it's fun once you understand this to go into a staff meeting and say, guys, do you realize y'all don't make a profit until 3:30 in the afternoon? What? What are you talking about? It's all the office break even and the break even of the doctor. It takes till 3:30 to cover that. That's why that 4 o'clock patient is so valuable. You're not making a profit until then. Down here, we also know the hygiene wages. We know their production. So we can look and see how well is the hygienist matching the 3-to-1 mythical ratio we'd like to see. And this one's right on the money. The goal is 33%. Hygienist is 31% of their production. So they're a little better than the 3-to-1. So a lot of neat stuff in here. A lot of you have been afraid of getting into the P&L and the financials. I think we can simplify it a lot for you with just the 6 major categories and get that number from the doctor. And we can coach you through how to discuss how the major overhead looks. And now you understand why their P&L may be not real reliable because they're hiding the 3 kids on the payroll and that trip to Hawaii, and you just don't know what to do with it.
Mm-hmm.
Okay.
Well, Rick, this has been very informative. Thank you very much. You put
Here's where we're showing you the collections down here versus some goals. So again, in one place, this is the most fascinating page. Show me the money. And this would help perhaps set your own treatment plan for how you plan to work with this office. Let's tackle some of the big numbers first.
Okay.
Down here, we show something fun. What percent of the patients who had Perio or SRP, what percent of the patients had at least 2 4910s? We find that sometimes surprisingly 5, 7%. Well, 4910s, as we all know from the past 5 years, speaking from the podium, that's what you're banging on the doctors. Look, we know you're doing 4910s. The hygienist is standing on the patient's chest, but you're calling it a 1110. How's that going to look when you're sitting in the witness stand and they've got your records in front of them asking you questions? They never saw 4910 done. That's like an orthodontist debanding a case after 2 years and not mentioning, oh, by the way, you need to have a retainer.
Mm-hmm.
They just wasted their SRP without the 4910s. And go ahead and man up and put those in the chart and charge for them, even though the insurance company may downgrade it. But it protects yourself. Because remember, you're going to have a patient that's loved you for 30 years, and now they're going to retire to Florida, say, and you're in Minnesota, and their new dentist says, oh my gosh, did your doctor mention these 5 and 6 millimeter pockets in your gum? Oh no, I went regularly every 6 months. And you didn't mention that? Well, somebody else with a hungry lawyer is going to bring this up, and you've got 20 years of x-rays of supervised neglect documenting you didn't do the right thing. And so that's why we'll focus on Perio a lot. I'm here.
Nice.
Okay, Miss Debbie, what else you want to talk about? Is that enough to fill your head for a while?
I think you've given us a wealth of knowledge. I want to just once again let the members know that they should reach out to you? I know that all of us are wanting to know more about helping our doctors with their financial snapshot of what's going on in the practice. It's something
Right.
that doctors haven't been trained on, and something that I know our client doctors don't always look at the numbers.
And they're not supposed to in many cases because they signed up to be healthcare providers. They want you to look at the numbers and tell them what to do.
So Rick, how can they best get a hold of you for your guidance?
Just Rick, R-I-C-K, at DentaMetrix, DentaMetrix.com. And again, in 5 minutes, we can set up the little app on a prospect's computer and do a free practice analysis and uncover a lot of these items that will just have them begging for you to come in and give them a hand. And you show how they can pay for you.
So absolutely right. And then the other thing is that you do have a website, DentaMetrix, and it's METRAX.
Yeah, DentaMetrix.com. That's the same as the Rick at DentaMetrix.com.
Yes.
Did I misspeak that?
No, you didn't. But I mean, when I first started learning about it, I was spelling metrics like METRICS, and it's METRIX.
Right, DentaMetrix.com.
So yeah, they can see this there. I know we have a lot of new members, and hopefully they've watched this, and then they can go see what you're all about. And I just thank you so much. You're just a wealth of knowledge and such a great support to us consultants.
Right. Look forward to seeing you guys in San Francisco at the annual meeting.
Yes.
And perhaps before then. And let me know if you'd like to get one of these complimentary analysis done for a test client or for one of your existing clients. That'd be fine.
Yes.
And let's do it for you as a marketing piece for you.
Yeah, and the thing is that Rick can help you to customize it for what you want your dashboard to look like, and then customize it with your clients' goals that they want to achieve. So he's really hands-on with you. Like he said, he's boutique. So thank you, guys. Thanks, Rick.
All righty, I'll stop sharing here. How about that?
Oh, good. There you are. Oh, thank you so much, Rick.
All right.
You've gone to a lot of work to put this together successfully. Thank you.
Yes, ma'am. Okay, talk at you later.
Talk to you. Bye.